Hey everyone, so I'm starting a little cannabis sort of mini series here on the channel where this entire industry has been left for dead. It's been taken out the back and shot essentially. Whatever terrible metaphor you want to use for this industry, this is what's happened. Have a look at these charts. These are some of the biggest names in the space and they're down, 80 to 90%. We've got Trulieve here down 90%. You've got Curaleaf also down about 80, pushing 90% as well. Green Thumb Industries about 80% too. These are the big American players. The MSOS ETF, which is essentially an ETF of the cannabis industry, is down about 80%. Then nothing's been spared here. Canada, the Canadian companies with Tilray and Canopy Growth are down 85% and 90% respectively. So this has been industry-wide absolute carnage. And for me, I think I sense a little bit of opportunity here. I think there's something to figure out here. And if you like being a contrarian, well, it doesn't get much more contrarian than this. Now, some of the stocks that I'm going to look at closely in this series, you can access them with Interactive Brokers. That's the broker that I use. There's a link in the description below. I highly recommend if you're wanting to get into this space, that's what I'll be using. Let's talk a little bit more about cannabis and why I think it's interesting. So the first point is that it's still federally illegal in the US. So most hedge funds, institutional investors, they're not even going to look at it. Most people in this space are ignoring this completely because they have other people's money to manage and essentially they can't go into something that's federally illegal still. So it really only leaves retail investors. Number two is that it's been absolutely hammered on the stock market as impatience has hit the investors coupled with like an oversupply of product and slow regulatory changes. Retail investors, I think, have just simply got to a point that they're over it and they don't see the light at the end of the tunnel. The third point is cannabis investing and cannabis industry as a whole has quite a bad reputation. There is a stigma around it. I sort of see it as a similar crowd that kind of got involved in cryptocurrency, all the Bitcoin bros and stuff like that. Cannabis has that kind of icky crowd associated with the industry because it's like full of these get rich quick scheme kind of people trying to trade. I've watched so many interviews that are just awful, with really good quality CEOs in the cannabis space, but they're interviewed by these people who are just idiots. And look, there's a lot of ickiness around the industry, and I think that's meaning that a lot of people who are level-headed are staying even further away. And number four, well, it's still a $100 billion industry and it's growing. 70% of it is illegal and about 30% of it is legal, but the demand is strong and the demand is there and it hasn't actually dropped away even though the stock prices look like it has dropped dramatically. Demand actually is pretty good. The market itself is just totally a mess. I'll go into more details why. Now, this is a pretty strong contrarian play. It won't be for most of you out there, but I guess that's the point. 99% of people are just overlooking this space. So where do we stand as the industry at the moment? So well, it's set up a little bit like this. Cannabis still federally illegal, but about 38 states have legalized it for medical purposes. A handful of others have legalized it for just general adult use, a little bit like alcohol, for example, where once you hit a certain age, it's okay. The product cannot cross state borders though, even if like Oregon and California, for example, both have legalized adult use, the product can't move between the borders. And that's just a regulatory issue. So it has to be grown and sold in the same state. And that doesn't really make a lot of sense, but that's the regulation and that's the environment. So like I said, it's a bit of a mess. Now, added on to these issues, cannabis itself is actually a really hard thing to grow at scale. It needs a lot of control. You need to control the environment really carefully. It's why you see these indoor facilities that they're really quite energy inefficient. They're trying to recreate this perfect growing environment. The plant itself is really sensitive to mold and bugs, and it's why everyone is wearing suits inside the warehouse. It's just really delicate, and all the protective clothing isn't to protect the humans, it's actually to protect the plant. So growing in these warehouses is expensive, but it does produce high quality and a consistent product. And that fetches a higher price. We call it the indoor price. But the costs are pretty high associated with this, as you can imagine. And it's quite inefficient generally because the climate in most states in America isn't going to be good for growing cannabis. Think of it like growing grapes. You need a certain stable climate to grow grapes. You don't grow grapes in Arizona in the desert. You can't grow it there, but you can grow it in the hills of Napa Valley, for example. So grapes need certain climatic conditions, and that's why you have to go into warehouses in certain states, because even though it would be more efficient to grow it all in, say, California or Oregon or in places like that, because you can't move it across state borders, that's why they have to set up these facilities in certain states like Arizona and places like that to control the environment and make it kind of similar to what they get naturally in the states like California. Now, the industry is a bit of a mess. It's wildly inefficient, and that is why I think an opportunity exists. So then you have what happened in 2022, and it was really ugly for the industry, especially in particular in California. So supply was very high in the state, which led to wholesale prices for producers getting just crushed from well over like $1,000 per pound to like $400 a pound. I think it might have even got less than that. It broke the backs of any inefficient producer. 15% of licenses to produce in California have not been renewed, and that's continuing to fall. I think it's getting close to 20% now of licenses haven't been renewed. So what I mean is, if you're a farmer or a producer, you need a license to operate. And because the prices have been so low, generally for anyone who's a little bit inefficient or subscale or anything like that, you've been able to produce, say, at $500 a pound. That's what your costs are to get it. So you really need a price above $500 a pound, but you've had a year of prices well below that. So you're burning money. So if you are running a quite tight ship, you don't have a huge bankroll, you're probably going to go out of business. And that's exactly what's happening with 15% of licenses not being renewed. It's already pushing 20%. The quantity of square foot available to produce was about 83 million square feet in the state. And now it's about 60 square feet and dropping further. But even though there's been too much supply, the demand generally has been quite stable, but there's just not enough dispensaries in the state as well. And the taxes that are getting enforced on producers are really onerous. It's really a mess. I can't stress that enough. But something that I've started to notice is that I think things are starting to turn. The cultivation tax in California was removed or reduced. More stores are starting to open up, so there's more opportunity for producers to sell their product, because I think there's like 1,000 stores in California, where a mature market really needs about 4,000, maybe 5,000 stores to operate in such a big state like California. There's just limited access to the product for the consumer. So even though demand is good, the supply chain just sucks. Now, after seeing a year of really bad prices below cost for most producers, we have seen things start to rise again, but it's going to be too late for a lot of the producers. But that constant thing that has remained is demand. Demand exists. It's stable. It's actually growing. The industry is just really immature and volatile, and it leads to these wild price swings in the supply dynamics. Now that leads me to the next, I guess, most important question is, well, who wins in this situation? Well, I think if demand is strong, then the companies with the lowest costs and the strongest quality and the strongest balance sheets, they're the ones that are going to survive and then thrive. So that naturally leads me to looking for the ultimate low-cost producers. So this will be farms that have scale advantages and are doing everything they can to drive costs down. Now, I have to give a big shout out to Aaron at Mindset Capital on Twitter. He writes a lot about the space and has been a really great resource into this. Follow him for more up-to-date info. He tracks it a lot more closely than I do. But he references this quote about what Warren Buffett and Charlie Munger said. Imagine there's two fictitious copper mines. One that can produce copper at, say, $1.50, and the other can produce it at $2.50. Well, when the price is $10, and well, it's everyone's winning. It's happy days. There's not too much of a difference between the $1.50 producer or the $2.50 producer. Everyone's making really good money. But when the price is $2, it's like they're in different industries. One of them is bleeding money, and the other one is quite profitable and healthy. There's obviously more to the cannabis space because copper is a commodity, but cannabis, there is different levels of quality. So if you could be the lowest cost but very high quality producer, that's going to be the key. Now, the next issue that I think about is, well, how do you reach scale if this is federally illegal and you cannot borrow money? Well, this is another area that's detracting from this cannabis industry investment. The only way to grow and expand and to reach scale, you have to build out the facilities. And to do that, you need money. And money that normal farmers would be able to get, cannabis cannot. So borrowing money from investors, diluting shareholders through warrants, this is one of the only ways. There are other ways to get money with other lenders, but it's not going to be through the traditional means, and it isn't going to be cheap. It can be upwards of 15, 20% interest rates, similar to borrowing with like a credit card. And we all know borrowing money off a credit card is a pretty bad idea, but that's essentially what's having to happen in the cannabis space. Now, not all companies have had to borrow at these rates. I like Trulieve from this perspective, as they were able to get financing at far lower rates than the rest of the industry back when interest interest rates were lower, they were able to borrow at around about 8%. But before you jump into Trulieve and start digging into that one, it's actually not my favorite investment though in the space at the moment. Even though I have a small investment in it, very small, I think I found some better ideas. The company that I'm going to cover in the next episode is called Glasshouse. They've issued debt at this 20% rate, and they're probably going to issue a little bit more. And that seems pretty nuts, and it is. So I sound crazy now that I'm going to pitch this idea, Glasshouse, to you in the next episode. So stay tuned for that, and why I'm going to, even though they have to borrow at these high rates, why I'm going to pitch you this idea as a good idea. I'll leave that for the next episode, and I'm going to go through why I think it is special. So stay tuned for that, and I hope you're enjoying this little mini series.